Cryptocurrency trading, a basic introduction. Firstly, common mistakes to avoid when trading crypto. Buying into cryptocurrency blind, without a chart, without a plan, and without performing technical analysis. A common mistake to avoid. Not paying attention to what Bitcoin is doing. Not paying attention to the direction of the money flow. Ignoring risk management. And a few more common mistakes to avoid: not taking profits, not exiting when things go wrong, and not considering the best place to enter or exit a potential trade. But where do we start if we want to get into crypto? Well, firstly, we start with TradingView. In TradingView, you can see the price history and price action of any given coin, token, or asset. You can use it to identify patterns and trend lines that act as support and resistance for the price action. We've got some horizontal lines on here and some diagonal ones which are acting as resistance and support for the price action. You can employ various indicators to support your trading and to help predict price movements. You can also set alerts so you can track said price movements whilst away from your computer. We actually have a more in-depth introduction to TradingView as a separate video, and I'll link to that in the description. This is a chart setup, something which crypto traders will create or use to facilitate a trade. But what exactly is it? A setup is a price chart for a particular token or coin that presents a trading opportunity and offers instructions on how to enter. A setup also highlights the profit potential for the suggested trade. A setup has key points of resistance and support already mapped out so you can plan for all scenarios. Setups are always dependent on broader market conditions, so you need to be paying attention to what Bitcoin is doing before entering, as you want to ensure that any setup you trade can fulfill to its maximum potential. This is an example setup which I posted in our trading group back in March. It has the big picture here, and then we have, of course, key moving averages, key resistance and support lines, as well as a falling wedge pattern here. And the instruction for this is essentially buy the retest following a breakout. So the price action moves up a level, it enters this falling wedge pattern, which is bullish, and the instruction for the trade was to buy the retest, which is essentially entering the market once the price action comes back down to confirm that this trend line is now support. And if you had bought the retest, 7 days later, you would have had 41% profits. First posted on the 11th of March, a very successful trade. But if you're new to the market, how do you utilize these setups? Well, firstly, you start by copying them, recreating them in TradingView. This will allow you to practice your charting whilst also developing your technical analysis skills. You then assess how you want to trade them. Where are you going to buy in? Where are you going to exit in profit and in loss? And under what circumstances won't you enter? And using alerts, you can wait for the price action to arrive at the point that is optimal for your approach to trading. For example, a major support line or a retest after a breakout, which was the premise of this setup. And of course, some people might use setups to make short-term trades. Others might use them for long-term investments. That's completely up to you. The importance of charting in crypto trading cannot be understated. Charting allows you to plan and manage trades. It provides a visual gateway into the movements of a coin or token. It also allows you to access an array of indicators that can inform your trading and improve your success rate. Without a chart, you cannot possibly know when to take profits, the best places to enter, or when to exit. Without a chart, you cannot identify patterns which inform your reasoning surrounding probabilities and strategy. Charts allow you to quickly ascertain the state of a trade without confusion and without emotion. Knowing what Bitcoin is doing is also key to becoming a successful trader, but without the ability to chart, you will not be able to access this information. Basic charting ability allows you to assess the price potential for any coin token in any market, and once those abilities are learnt, it gives you a life skill that only a select few have: the ability to make money out of nothing. Hidden in this video is a Bitcoin. It's not the one in the bottom corner. If you manage to find it, let us know in the comments, and hopefully this bull run I'll be able to help you find many more. Now back to the vid. This is an exchange. Once you've learned how to chart, once you've learned how to draw patterns, and once you've started to develop your ability to perform technical analysis, you need to be able to, of course, buy and sell crypto. And you do that on an exchange. An exchange allows you to trade crypto coins, tokens, and assets. Most traders will buy USDT, a stable coin pegged to the US dollar, and then use that to buy other coins, tokens, and assets. Not all exchanges list every crypto coin or token, so you'll need to be registered on a few, perhaps Binance, MEXC, and KuCoin as examples, to get access to a good variety. You can also use an exchange to store your crypto in between trades and to automate trade entries and exits should you require, but you can also do everything manually as well. Moving on now to things you need to learn to be a successful crypto trader. Chart patterns in this example help you predict price movements based around probabilities. Learning how each pattern works is key to becoming a successful trader. So learning to identify chart patterns, what they mean, and the probabilities associated with them are the first thing to do when you want to become a crypto trader. Next up, things to learn: oscillators, indicators. Oscillators are supportive indicators that help you assess price movement. Learning how to interpret the RSI, the stock RSI, the MACD, open interest, moving averages, etc. can help give you an edge. This particular example has got the stock RSI, which you can see when it reaches oversold here, below the 20 line. You can see that's when the price action starts to reverse and head higher again. Just an example of how indicators can help predict when the price is going to go up or down. Things you absolutely need to learn: oscillators, indicators. Probably one of the most important things you need to learn is risk management. Risk management is about assessing the risk of a potential trade and planning to mitigate it. Having predefined exit points decided before entering a trade in case the price action goes in the wrong direction is fundamental to trading crypto given its volatile nature. Using stop losses on exchanges to automatically exit a trade to minimize loss is something you need to get your head around pretty early. And finally, having clearly defined price targets to ensure you stick to a trading plan and not get caught up in the excitement of the potential for more profits is key to risk management. I have a separate video on risk management which I will link to in the description, so be sure to check that out. If you're willing to put in the time to get to know this market and develop your skills, you can achieve percentage gains like these. I will be routinely breaking down successful trades and highlighting my decision-making process for each one. No hot air or bluster here, just the cool breeze of a strategy that works. If this content is for you, please consider subscribing. How do you get started then? Well, firstly, step one, get familiar with TradingView and practice copying, recreating the chart setups I post in my trading group, or by charting coins, tokens yourself by trying to spot patterns and trend lines. Step two, practice assessing your setups for potential entry points, take profit price points, and when to exit if the trade goes bad. You must have a plan, develop a bullish case and a bearish case, and then assess if it's something worth trading. Step three, register on a few exchanges. For example, Binance, MEXC, and KuCoin we've already mentioned, but there's many to choose from. Step four, convert a small amount of fiat currency wherever you are in the world to USDT and get it on one of those exchanges. Step five, start trading with small amounts while you develop your skills. You need to find a strategy that works for you and stick with it. The more you learn about patterns, oscillators, and how to use exchanges, the better you'll get. But experiencing losing trades is part of the process. And finally, step six, when you can double $100, then you can trade with more, but not before. So once you've got started, here are a few trading tips for beginners. Tip number one, every trade should boil down to one simple question. Where are the buyers? Where are the sellers? You need to get good at answering those questions. Tip number two, Bitcoin runs this entire market. Altcoins will only move if Bitcoin lets them. Never ignore Bitcoin or the money flow when entering a trade. There is a right time to enter and a wrong time to enter. Tip three, know your limits. Traders who enter the market in ignorance lose money. Put in the time to learn. Google is your friend. Now, there are different types of trades to consider, and let's briefly go through them. First up, short-term trades, which have about 10 to 30% returns on average over a few days, and you can compound those profits over time. Short-term trades capitalize on small movements, and you'll be focused as a trader on the day-to-day market weather in order to enact them successfully. Then you have medium-term holds, which have slightly increased returns between 30 and 100% traded over a few weeks. And medium-term holds are looking to capitalize on bigger moves, but you as a trader will be less concerned with day-to-day market weather, as these medium-term holds will be traded over an extended period of time, maybe 6 to 8 weeks, 2 to 3 months. And then finally, you have long-term holds, which essentially have anything between 500 and 6,000% returns. And this is where traders will buy tokens and coins at the beginning of the bull run and then sell after about 12 to 18 months once Bitcoin has completed its cycle. Traders performing long-term holds are not concerned with the day-to-day market weather, just the long-term outlook and historical trends and how that can impact your profits. Now, all of that may seem quite overwhelming, a lot to learn, a lot to figure out, but you don't need to do it alone. What we provide at Crypto Future is setups to trade so you don't have to do them, daily Bitcoin and market coverage to keep you informed, learning content for beginners, a learning support area where you can ask questions and get the answers you need, daily strategy tips to keep your skills honed, investment guides to help you with long-term holds, and of course, weekly content on YouTube. Your crypto future really does start here. This has been a basic introduction to cryptocurrency trading. To learn more, hit that subscribe button, and you can also join our trading group on Telegram for everything you need to become a successful trader this bull cycle. Don't miss out. Until next time.